Welcome back, my passive income investors. Alike to Tesla's earnings. We're waiting for their conference calls. You can hear the musical background going on here. Taking a look at their stock, up 14% in after hours during their earnings release. But we want to listen to it personally from Elon Musk, who is always casually late, as it's already 6:30 and the time says it's supposed to be live at 6:30. So we're just going to sit here, patiently wait, and while we keep our ears open for that, maybe we'll take a look at some of their earnings release, which by expectations, revenue was supposed to be around We'll come back.
Please continue to stand by. Thank you for
Stand by. Don't worry, I'm going to crank the volume when we get there, but this is good. While we wait for the conference call, expected revenue was $7 billion for the quarter and gains of $1.62. But today, Tesla announced $7.3 billion and $2.14 per share for earnings per share, which is well above what they obviously were expecting, which is beautiful, but does it justify this? What are we sitting at, like $120 billion market cap today, guys? I'm really excited because I've got about, $12,000 in Tesla at this point, and I'm honestly considering if I should pull out my initial investment at this point, because I had it open here. Maybe we'll take a look at it while we wait. My Tesla position currently sits at, and this is in after hours. I mean, before the market closed, I was at 580, sitting up real nicely here. And I'm debating on whether I should just, outright pull out my initial investment, because if I pull it out, I mean, I could have no risk in Tesla, have doubled my money, and then just invest that into dividend stocks. So I feel like I'm in a good position, but I'm kind of debating the risk reward if I want to keep my shares. And I'll let you guys know, obviously, as I move forward. I'm more on the edge of keeping the shares, but it sounds like we're going live, guys. Let's take a listen.
I would now like to hand the conference over to your speaker, Mr. Martin Vieca, Senior Director of Investor Relations. Please go ahead, sir.
Thank you, Sherry, and good afternoon, everyone. And welcome to Tesla's fourth quarter 2019 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q4 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During the call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you'd like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So Q4 was another strong quarter for the company. Deliveries reached over 112,000 vehicles in a single quarter. It's hard to think of a similar product with such strong demand that it can generate more than $20 billion in revenue with zero advertising spend. I think we do say that from time to time, and I think it's often overlooked. But to have the highest demand electric vehicle in the world with no advertising spend is, I think, quite remarkable, and speaks to the nature of the product and the fact that the product itself is compelling enough to generate that demand without a bunch of advertising. At our Fremont factory, we were producing at a rate roughly the same as the NUMMI factory did in its record year of 2006, and obviously we expect to exceed that significantly this year. This rate of production was achieved before we even started to produce the Model Y out of Fremont, so there's a lot of potential to go beyond that number. For the Shanghai factory, I'd like to say congratulations again to the team in Shanghai on launching Model 3 last quarter and achieving the first deliveries earlier this year. I'm really excited and optimistic about the potential for the Shanghai factory. I think it's going to be an incredible asset to the company. And we also broke ground on the Model Y factory in Shanghai. So there's a lot of good progress there. Regarding Model Y, it was only 10 months ago that we revealed a Model Y prototype. And now, in January this year, we started producing Model Y in limited volumes already. This is thanks to a great effort of our engineering team, and we managed to achieve by far the highest energy efficiency of any electric SUV ever produced at 4.1 miles per kilowatt hour, which means Model Y all-wheel drive got an EPA rating of 315 miles. This improvement is reflected on the configurator as of today. this is above what we previously stated by a pretty significant margin. And just with great acceleration, top speed, it's really just incredible specs all around. For the Cybertruck, a few months ago we revealed the Cybertruck. That went viral, and we tried to build a product that is superior in every way without any preconceptions of how such a product should look. So it really just from the standpoint of what's the most badass, futuristic armored personnel carrier that kicks the ass of any pickup truck. Basically, that's the goal. We wanted it to look like something that just came out of a sci-fi movie set from the future, and the demand has been incredible. We've never seen actually such a level of demand at this. We've never seen anything like it. Basically, I think we will make about as many as we can sell for many years. So as many, we'll sell as many as we can make. It's going to be pretty nuts. And I think actually the product is better than people realize. Even they don't even have enough information to realize just the awesomeness of it. It's just great. So, and then stepping back in 2018, from a financial standpoint, we were free cash flow break even. But in 2019, we managed to generate more than $1 billion free cash flow while building a factory in Shanghai in record time and while building parts of Model Y in production. So I think for us to have this level of free cash flow while making massive investments in capacity, while developing new products, while improving the core engineering is a testament to the, I think, incredible performance of the Tesla team, and I'm just so proud to work with such a great team. I'd like to thank the whole Tesla team for their ongoing work on cost control. Is what has allowed us to get to these compelling financial numbers while at the same time growing the company at an incredible pace. And in conclusion, when I think of what we have in front of us the next couple of years, we've got Model Y, we've got Giga Berlin, Tesla Semi, solar glass roof, Cybertruck, some very exciting improvements in back battery technology, full self-driving, got the next-gen Roadster, and probably a bunch of other products we'll come up with too. It's hard to think of another company that has more exciting product and technology roadmap. So super fired up about where Tesla will be, in the next 10 years. If you look back 10 years from today to 2010, we will produce approximately 1,000 times more cars in 2020 than we produced in 2010. 8,000. And we have also solar glass and solar retrofit and Powerwall, Powerpack, all those other things too. So where will we be in 10 years? Very exciting to consider the prospect.
Thank you very much, Elon. And Zach has some opening remarks as well.
Yeah, thanks, Martin. This past year was truly transformational for Tesla, and I want to thank everyone who's been a part of making this happen. On 2019, a few key points I'd like to highlight. On demand, while we've mentioned this a few times, it's worth highlighting once again. Over the course of the year, we've transitioned entirely from generating Model 3 orders from a reservation backlog to generating new and organic demand. We've also seen a stabilization of Model 3 ASPs, even increasing slightly in Q4. And we've seen an increase in ASPs of S and X after the launch of the longer-range versions in Q2. With respect to capacity expansion, we've greatly learned from the development and launch of Model 3 in Fremont and Reno. As a result, we've been able to bring new production capacity on board faster and with less cost. This is evidenced by the launch of Model 3 in Shanghai as well as Model Y in Fremont, programs that were both launched in under 1 year. Financially, we have demonstrated multiple quarters of strong cash generation, enabled through higher volumes, improvements to capital efficiency, progress on working capital management, and continued improvement in our product and operational costs. And we are able to achieve positive GAAP net income in both Q3 and Q4 for many of the same reasons that enabled strong cash generation. We've also made progress on recurring and software-based revenue with the implementation of premium connectivity and the beginning of upgrades available for purchase via the Tesla mobile app. Finally, on stock-based compensation, it increased sequentially by $82 million, driven almost entirely by an expense related to the next tranche of the CEO grant. This is a result of our improved expected financial performance of the company, which the CEO stock grant is tied to. As we look ahead to 2020, this again will be an important year for the company. Our task ahead is to execute on the next phase of growth while managing cash flows to support that growth. On Model Y, we expect first deliveries in limited quantities later this quarter and will ramp over subsequent quarters. As mentioned previously, we are forecasting higher gross margins on Model Y compared to the Model 3. This year, for the Shanghai-built Model 3, we expect to achieve run rate production and delivery rates. In addition, we expect to have completed the majority of planned supply chain localization at the factory or in the region. This is one of the most important components to achieve lower production costs for the site. We are also seeing strong order rates for the locally built Model 3 and remain focused on continuing the production ramp and managing costs. We also anticipate significant progress on factory construction of the Shanghai and Berlin-built Model Y, which will result in continued increases in capital spending. On operating expenses, I expect an increase over the course of the year to support our growing product pipeline and international footprint. However, OPEX growth should increase at a lower rate than top-line revenue. Overall, we believe this will set us up for our strongest annual financial performance yet, with sufficient forecasted cash flows to support investments related to our growth and further strengthening of our balance sheet. For Q1, please keep in mind that the industry is always impacted by seasonality. Additionally, we are in the process of ramping two major products, Model 3 in Shanghai and Model Y in Fremont, which I expect will temporarily weigh on our margins. We are also in the early stages of understanding if and to what extent we may be temporarily impacted by the coronavirus. At this point, we're expecting a 1 to 1.5 week delay in the ramp of Shanghai-built Model 3 due to a government-required factory shutdown. This may slightly impact profitability for the quarter, but is limited as the profit contribution from Model 3 Shanghai remains in the early stages. We are also closely monitoring whether there will be interruptions in the supply chain for cars built in Fremont. So far, we're not aware of anything material, but it's important to caveat that this is an evolving story. However, we have more than sufficient cash to continue our expansion plans while further strengthening the balance sheet. Thank you again for your support, and we will turn to questions.
Thank you. We are going to take the first questions from retail investors compiled by Say Technologies. So the first retail investor question is, since solar is required for all new home constructions in California, do you have any substantial orders for solar glass roofs from any of the large California home builders that you can share? What's the 2020 target for the number of solar glass roof installations in California?
Well, I think we are seeing, admittedly from a small base, exponential growth in demand and output for the solar glass roof. So it's difficult to predict what the number will be this year, except that the demand is very strong, and we are working also not just through Tesla installers, but also through new home builders and through just the roofing industry in general, where there's in North America on the order of 4 million new roofs per year. So we see a lot of interest, and so it's just a question of refining the installation process, getting lots of crews trained to do the installation. But over time, I would expect a significant percentage of new roofs to be something to use solar glass in one form or another. It's really going to be a choice of, do you want a roof that is alive with power or dead without? And I think people will want a live roof that generates power and looks good and lasts a long time, and it's the future we want. So it will be a significant product, but because it is a new and quite revolutionary product, and there's a lot of challenges to overcome, but they will be overcome, and this will be a major product line of Tesla. And the Buffalo factory is doing great. So, yeah.
Thank you. Second question from retail shareholders is, will you release the Tesla ride-hailing network app before full autonomy and change the terms of Tesla insurance to allow owners to be drivers on the network? If so, when will this happen? Might want to target California airports first. Also, a good place to add superchargers.
Sorry, that sounds like one question in one?
Yeah, it's a bit of a bundle, yeah.
Well, I think that it probably will make sense to have to enable car sharing in advance of the kind of sort of giant robotaxi fleet, because the car sharing can be done before full self-driving is approved by regulators. So it's probably something that we would enable before the full sort of robotaxi fleet is enabled. It sounds like there were some other questions bundled in there.
Superchargers at airports?
Oh, sure. Yeah, probably we'll have superchargers at airports. We'll have superchargers wherever we see that there is a need for superchargers.
And then on the insurance part of the question, it is our intent to allow people to put their cars into ride-sharing or the FSD network using Tesla insurance.
Yeah.
That's not currently the case, but by the time that this is available, it's our intent to get that ready.
Okay, thank you. The next question from retail investors is, how many California owners are currently insured with Tesla insurance? What's the target for Tesla insurance in 2020? When will you start to significantly leverage the data you have from the fleet to lower the cost of your coverage? Will we get premium discount of certain percent?
Yeah, I mean, go ahead, Zach.
Yeah, so Tesla insurance is currently available in California. A couple of things that we're working on this front. The first is to expand it to other locations, and we're preparing the regulatory processes, preparing our processes to go through the regulatory processes in those locations. We're also working on the processes to continue to adjust our rates in California, which also have to go through regulatory processes, as insurance is quite heavily regulated. And that's where we're spending our time focusing on Tesla insurance right now. There's a significant amount of innovation, as we've discussed before, in this space, exactly getting to the intent of what the question here is, using our technology to reduce rates, and this will be rolled in over time.
The last part of the question was, will there be a discount for using autopilot with our cars?
Oh, yeah, there will be.
Yeah, the rate card for California Tesla insurance already considers the safety features associated with autopilot.
Right, but I think it would make sense for us to close the loop on, higher use of autopilot probably reduces the insurance costs. It lowers the probability of injury. So I think insurance is going to be, I think, quite a major product of Tesla over time. The amount of money that people spend on car insurance is like a remarkably big percentage of the cost of a car. Like you can lease a Model 3 right now for $400 a month, but a typical owner in California will be paying, somewhere between $100 and $200 a month in insurance. So we're talking about something which is maybe a quarter to half of the cost of the lease of the car is insurance. A lot of that insurance cost is just because the insurance companies don't have good information about the drivers, and that there's no good way to provide feedback where, it's a very poor feedback mechanism in terms of the insurance rates versus the actual way that the car is being driven, whereas we can do that in real time. It's a fundamental information advantage that insurance companies don't have.
Thank you. The next question is, you set expectations that you would be feature complete on FSD by the end of 2019. Can you please provide an update on when will we see this with end users? Where are you in retrofitting the FSD computer to older models?
Well, I mean, to be precise, I said I was hoping it would be feature complete with full FSD by the end of last year. we got pretty close. It's looking like we might be feature complete in a few months. But feature complete just means it has some chance of going from your home to work, let's say, with no interventions. So it doesn't mean the features are working well, but it means it has a above zero chance. So I think that's looking like maybe it's going to be a couple months from now. What isn't obvious regarding autopilot and full self-driving is just how much work has been going into improving the foundational elements of autonomy. The core autopilot and Tesla autopilot software and AI team is I think very, very strong and making great progress. We're really only beginning to take full advantage of the autopilot hardware, the FSD hardware. So I think the apparent progress as seen by consumers will seem to be extremely rapid, but actually what's really going on behind the scenes, like I said, is having the foundational software be very strong, having a really strong foundation. And then a really fundamental thing is moving to video training. So in terms of labeling with video and all 8 cameras simultaneously. This is a really, in terms of labeling efficiency, arguably like a 3 order of magnitude improvement in labeling efficiency. For those who know about this, it's extremely fundamental. So that's making great progress on that.
Thank you. And the last retail investor question comes from Kendall. Since most retail investors seem to understand Tesla better than analysts and are risking a larger part of their own personal wealth on Tesla, doesn't it make sense to take mostly questions on these earnings calls from us via Say? Do you even have to take answer questions from analysts?
Well, I guess we don't have to. I do think that a lot of the retail investors actually have deeper and more accurate insights than many of the big institutional investors, and certainly better insights than many of the analysts. It seems like if people really looked at some of the smart retail investor analysts, what some of the smaller retail investors predicted about the future of Tesla, you'd probably get the highest accuracy and a remarkable insight from some of those predictions.
Okay. So now let's switch to institutional shareholder questions. The number one question is, you have spoken previously about Shanghai Giga being 65% lower capex per unit of capacity. Have you learned to do anything better or differently from an OPEX perspective? And if yes, what kind of impact might we expect on the long-term gross margin?
Sure, go ahead, Zach.
Yeah. The Shanghai factory has been a quite remarkable cost experience across all line items of COGS for the Model 3 there. We have talked a lot about the capex per unit of capacity being lower, but you can basically run down the entire list of COGS between labor cost, material cost due to localization, so it's opening up suppliers that would not have made economic sense from the States. Localizing the supply chain flows into inbound logistics.
All right, ladies and gentlemen, I'm going to kill the stream here because I've heard what I needed to hear on the most important highlights, and I do have some concerns. There's a lot of questions. This is my live listening to this with you guys, so you're getting my real reaction here. But the biggest concerns that I have, it's kind of like a mixed news report here. I think people are really overlooking the negatives considering we just did apparently incredible with Cybertruck sales, like beyond. So, I mean, that was really good news. But what really struck me in this whole thing was the fact that they're closing down temporarily the factory during this virus. I think that was something that, skipped a heartbeat that most people, I don't even think, paid attention to. I saw someone mention it in the Stock Twit stream as well, which was really concerning. And then on top of that, guys, self-driving, Elon Musk didn't seem like overly excited about the self-driving capability, like not as excited as I thought, considering he says, we got a great team, we're working on this. At least it was nice to hear something about the solar as well. But I'd love to know what you guys thought about this earnings call in that comment section below. I'm still on edge on about my shares because, as they said, expect slower growth in the first quarter of this year. In the macro, looking very positively on the first quarter of this coming year. And I'm still, like I said, guys, stick around, subscribe to the channel, and I'll let you know if I decide to liquidate some of my shares at this point, because we are getting into what I'm going to tell you, and this is my honest opinion. We're in bubble territory with this current company. It has a lot to prove, and I'm really relying on self-driving to become a capability and for their insurance to take over. But it doesn't seem like that's a core driving factor as much as just trying to get the Berlin factory open. And it's going to be neat to see how this grows over time. And like Elon said, I'm expecting some real good stuff in the long term over the next decade. I do not plan on liquidating all of my shares. But the fact is, guys, I've got 13,000 US dollars sitting in this stock for my initial investment, and say, heck, I liquidate those shares and I put it into a stock that's paying out a 4 or 5% dividend yield. Heck, that's going to make me enough money to take a week off every year. I mean, it's going to, equate to about $400 or $500 Canadian in dividends. So, I mean, it's kind of weighing the options here right now, but where things are getting really pumped up, I think if we can see another big pop in the stock, I'm going to consider maybe leveraging down and taking some risk off the table. But again, I'd love to know what you guys think. So stay cool, stay awesome. I look forward to chatting to you all real soon.